Welcome to today's Heartland Market Talk. Explosive action as the wheat market has moved limit status for the sixth day in a row. 5 of them limit up, 1 of them was limit down, as the market is now in pure paranoia, panic buying mode. And in the words of a famous female comedian, I can't think of her name right now, she said, "Can we talk?" Well, can we talk? As we look at what is happening in the wheat trade, it's over panic that, never mind the fact that the Black Sea region will not be exporting wheat at least for 3 to 6 months, but ultimately the wheat that's laying there left over. And granted, the Ukrainians and the Russians had pretty much sold most of the wheat they were going to sell from last year's crop. We're looking at about 150 to 100 million bushels of wheat was left in Ukraine. Not enough to suck up our carryout, which is still at 680 million bushels. And Russia had already on February 15th, 5 days before the invasion, we'd known for months they were going to start a quota and they weren't going to sell much more wheat until new crop arrived July 1st. Okay, so now the new talk, and it's funny when you watch this, I've seen it on one of the financial channels, you've got these guys, these index fund traders, who were short wheat just 2 weeks ago, by the way, losing money. Now they're buying it like it's no tomorrow. And the response is, and what the marketplace is, everybody is concerned that wheat is not going to get planted in the coming weeks, about 5 to 7 weeks when spring weather opens up. In Russia, nothing's going to get planted. Well, it doesn't take much for the average person to grab your little iPhone or your Android, Google up what is the wheat breakdown for Ukraine and Russia. Did you know that 95% of all the wheat grown in Ukraine is winter wheat? In Russia, 70% of all the wheat grown is winter wheat, except for Siberia, because, they're just a little bit colder than North Dakota, Manitoba, and Saskatchewan. Not by much. Some days you'd think we're colder than them, but that's where the spring wheat's at. So the bottom line is the wheat is not going to have a problem getting planted because it's already planted, waiting to green and grow. So another dilemma for those that are buying into this excellent opportunity for farm producers, as now we've elevated new crop values in most areas to over $10 a bushel to lock and load before you even pull the planters out, especially for spring wheat. Now, for farmers that would say, of course, I remember my grandfather and my father, we don't know what we're going to grow. Well, that's not true, because you've already had 2017 and 2021 show you what you do produce in a drought year. So what you need to do is take that amount and make 100% sale of that new crop potential at current prevailing prices, because the way this thing works is it's going to go limit up, and when it turns, it's going to be limit down, and you'll get nothing done, because that is what is in control is speculators. We know speculators are in control of this now rather than the reality of grain buyers by the Chicago wheat contract. Chicago wheat we call the garbage wheat. That's the wheat, the soft wheat out of Illinois, Indiana. It's great for rotations. We sell that to third world countries because it's easy to break it up on rocks to live off of. The good wheat is Kansas, and the best wheat is spring wheat. Well, guess what? As we trade, we just went limit up on everything, but when we trade, you will find that last night before we went limit up, Chicago wheat was ahead of Kansas. Kansas wheat was ahead of Minneapolis. In fact, Minneapolis was the last one to finally go limit up today, with Minneapolis September wheat, new crop, not even limit up yet. It's some 15 cents off that high. But with that in perspective, the panic has now created this euphoric, I've got to buy wheat, period. And Katie barred the door to logic. Logic doesn't matter anymore. So where this thing stops really is truly a guess. But unlike lumber, when you only have 1,500 contracts traded in a particular month, you have wheat where 150,000 contracts are traded, a completely different animal. And so when this thing gets a sense, and I don't mean the word, but a sense of a potential truce is developing in Ukraine, between Ukraine and Russia, grain prices will collapse just as easy as they went up here as of late. And just remember, last week, Friday, 4.5 trading days ago, wheat was limit down and wouldn't come off limit through the close. And even when we started opening Sunday night, we opened higher, but the market was a dog until we got to Monday day session. That is how fickle the emotions are in these markets. So keep that in point. The strength in the wheat market spilling into corn, pulling the May corn contract to a new contract high, while the July contracts forward have not made new highs that were already established a few days ago. Soybeans nowhere near highs made last week. In fact, we couldn't even get over $17 bushel on the spot contract today, even though they tried several times. We're about 18 cents off those highs, and well below last week's highs, which were up at $17.60. Just want to remind you, Heartland Diversified Crop Insurance Agency, which is an affiliate here at heartlandinvest.com. We offer federal revenue crop insurance, and you may be doing it with the guy down the hall at your bank, or you might be doing it with the guy that sells you insurance on your tractor and your truck. And yes, they probably do a good job of giving you quotes, but wouldn't you want to do that with somebody like at Heartland Investor Services, who not only understand that in the market, we can find the most optimum coverage combination for your operation with our quoting tools. Sometimes there are benefits to adding supplemental coverage. Sometimes it's a waste of money. Where we look at is how to add put options into it, because if we have a price decline from these elevated levels and you grow a decent crop, your overproduced bushels will offset your payout, and you still want to lock down these high prices. So contact us here at heartlandinvestor.com as we're moving forward here into this revenue insurance discovery price window. Now, moving over to cattle to implode, we are now $10 off the high made a couple of weeks ago. Limited cash trade taking place. What is selling in the south is about $140. It's $2 lower than last week, and offers are still hanging there at $142, with the box beef pricing showing choice down 98 cents, select down $1.90. April cattle down $1.80 at $138.30. June off $1.45, $135.05. Feeder cattle, April down $2.32, $160.67. May off $2.47, $165.52. Hogs down $1 on the Aprils, $105.27, up 22 cents on the June, $116.67. Just enough time to talk about crude oil. Crude oil made a new high last night to $116.57. Has dropped to $10 initially this morning, but now we're about $6 off the highs, as it's rumored that within 72 hours, Biden will help ink another deal with Iran to get 1 million barrels of oil a day out into the oil market, which is what the market's been hoping for, waiting for. The question is, how many $1 billion have to be flown in the dark of night on pallets in C-130 military planes to be given to the Iranian hierarchy to get this done? We'll see, but that's the talk. So crude oil, April, down 38 cents a barrel, $110.23, about $6 plus off the overnight highs. Gasoline still up on the day, 2 cents a gallon for the April contract, $332.78. Heating oil up still 4.5 cents a gallon, $2.54, but that is considerably off overnight highs of 30 cents a gallon higher. Any questions? You can always find us at heartlandinvest.com. Thanks for listening, and have a profitable day. Just a reminder to always remember, past results are not indicative of future results. Consider us carefully before ever investing. Our analogy is made with the best known information that is expected to be true and known, but it changes by the hour in the commodity markets. And so something that could have been considered can change as the facts change.